Hey everyone, welcome back to Corporate Decoder, the place where we read through complex financial reports so you don't have to. Today we are diving into Core & Main's annual report, and let me tell you, it is filled with numbers and legal speak. But fear not, we'll decode the key details for you. We're going to find out if Core & Main is really building something solid or just laying a bunch of pipes that might leak later. In short, Core & Main had a decent year with sales going up, but higher costs are cutting into their profits. Acquisitions are a big part of their growth plan, but they also bring some risks. We'll break it all down, so let's get started. First, a quick note on forward-looking statements. Basically, anything in this report that talks about the future is just an educated guess, not a guarantee. Many things can change, so keep that in mind. Now that we've covered that, let's get into the real stuff. Core & Main is a big player in the world of water, wastewater, storm drainage, and fire protection. They sell pipes, valves, and all sorts of related products to municipalities, private water companies, and contractors across the country. Think of them as the Home Depot for underground infrastructure. They operate in a large but fragmented market, meaning there are a few big companies and many smaller ones. Core & Main estimates this market to be worth about $39 billion. The big player in the world are 370 locations in almost every state, serving more than 60,000 customers. They sell pipes, valves, and all sorts of related product, meaning there are a few big companies and many smaller ones. Core & Main estimates this market to be worth about $39 billion. There are a few big companies and many smaller ones. Core & Main estimates this market to be worth about $39 billion. There are a few big companies and many smaller ones. Core & Main estimates this market to be worth about $39 billion. There are a few big companies and many smaller ones. Core & Main their business comes from three main areas: municipal projects like city water systems, non-residential construction such as commercial buildings, and residential construction, meaning houses and apartments. They also get business from both new projects and the repair and replacement of existing infrastructure. The company states that they expect the increased federal infrastructure investment to have a core focus on the repair, replacement, and upgrade of municipal water infrastructure systems. In simpler terms, they're hoping for a big boost from government spending on water and infrastructure projects. A big part of Core & Main's strategy is buying other companies. They have a history of acquiring businesses that help them expand into new areas, gain access to key talent, or offer new products. Basically, they're growing by gobbling up smaller players. They are very specific when it comes to acquiring companies to expand margins and generate extra value. Now, let's look at what could go wrong, because every company has risks, and Core & Main is no different. One major risk is the ups and downs in the US construction market, which directly affects how much they sell. If people aren't building, they aren't buying pipes. Municipal spending is also a concern, since they're so reliant on government-funded projects. Delays in government funds or changes in budget priorities could hurt their sales. Price changes in their product costs are another significant risk. If prices go up and they can't pass those costs on to customers, their profits will suffer. Supply chain problems, tariffs, and global conflicts can all cause these price swings. Like any modern company, Core & Main faces cybersecurity risks. A successful cyber attack could disrupt their operations, expose sensitive data, and damage their reputation. This is a major concern. These agreements dictate that Core & Main needs to make cash payments regarding certain tax benefits, which might be significant. The company is obligated to pay 85% of the tax benefits to certain parties, which could impact the amount of money they have in hand to invest in growth. Now let's move on to the company's stock. Core & Main's Class A common stock trades on the New York Stock Exchange under the ticker symbol CNM. As of early 2025, there were very few registered holders of their Class A common stock, which doesn't tell us much. The company does not currently have an approved plan to pay dividends on their Class A common stock. The company may repurchase shares under their repurchase program, but they aren't obligated to. Share repurchases can happen through open market or privately negotiated transactions. Here we can see the financial health of Core & Main. I'll sum up the important stuff. Net sales for fiscal year 2024 increased by about $739 million or 11%, reaching $7,441 million. This increase was driven by acquisitions, higher sales volumes, and an extra selling week. However, there were some slightly lower selling prices too. Gross profit for fiscal year 2024 went up $162 million, about 9% to $1,980 million. As a percentage of net sales, though, gross profit decreased from 27.1% to 26.6%. This happened because they didn't have the benefits from strategic inventory investments compared to last year. These costs, also known as SG&A, rose about $147 million, or almost 16% to $1,078 million. The increase includes $105 million in personnel expenses primarily related to acquisitions. Operating income, which is revenue minus operating expenses, decreased $21 million or 2.8% to $71.19 million. This decrease primarily came from those higher SG&A expenses. Interest expenses rose to $142 million compared to $81 million as a result of more money borrowed. The tax bill also saw an increase by $15 million, reaching $143 million. This happened because the company's effective tax rate increased. And lastly, net income decreased by $97 million, ending up at $444 million. This was primarily due to the aforementioned increase in interest expenses. Cash flow tells us whether the company can pay its bills. A decrease of $448 million was reported because of inventory investment and high interest and income tax payments. These activities used up more cash by $518 million in fiscal year 2024 due to more cash outflow in new acquisitions. Adjusted EBITDA, which is a non-standard metric sometimes used to evaluate companies, increased $20 million or 2.2% to $930 million. The company believes they have enough money to cover expenses for the next 12 months, but this depends on things going as planned. Also, acquisitions may happen in the future and will require more capital or loans. As of February 2025, they had long-term debt worth $2,283 million at variable rates. If interest rates go up, the cost of servicing their loans increases as well. Core and Main, they take cybersecurity seriously. Senior IT and cybersecurity leadership is on top of it, meeting regularly, and they engage with external service providers to evaluate the effectiveness of the company's cybersecurity program. The company also engages third-party cybersecurity experts to assess its processes and suggest improvements, which are reviewed with the company's executive leadership, the board of directors, and its audit committee. Some of Core & Main's top executives have set up predetermined plans to sell their stock. It sounds like they're using these arrangements to diversify their holdings or plan for future expenses. Lastly, PricewaterhouseCoopers LE. The company's external auditor gave a thumbs up to Core & Main's financial statements and internal controls. Okay, so what does all of this mean? Core & Main is growing, no doubt, thanks to a mix of increased sales and smart acquisitions. However, profitability is still a question since costs are rising quicker than revenue. High debt level is worth noting. It could become a problem if interest rates don't come down. Also, it is not clear when is the increased federal infrastructure investments going to pay out, since that would be a boost to companies' core business. Overall, the company's direction can be judged as medium. They have potential for growth, but need to keep an eye on costs and debts. For now, Core & Main is neither a steal nor a bail. It is a wait and see. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, subscribe, and leave a comment below. What company should we decode next?